Today, David Rubenstein was on TV and he was talking about Bitcoin. Not just about Bitcoin, but the crash that occurred yesterday, which was one of the biggest crashes in the history of Bitcoin.
David, I know you're a long-term investor and not somebody who looks at many of these day-to-day moves, but yesterday was pretty weird, especially when you looked at cryptocurrency.
At least in recent times in a single day. But for those not familiar, David Rubenstein is a multi-billionaire and the co-founder of the Carlyle Group. The Carlyle Group is one of the most valuable private equity firms in the world. It has about $250 billion. I believe that puts it in the top 5 largest private equity firms by assets under management. In addition to that, David Rubenstein is considered to be one of the smartest people in finance and also the co-founder of the group. So to have his opinion, he is legitimately one of the most knowledgeable people who has the most experience running private money.
Even as a long-term investor, you have to pay attention to some of these moves.
Well, remember, crypto has come from nowhere to be a force in the market. It's, in effect, a gold substitute for some. And I have invested in not cryptocurrencies myself, but in things that I would say facilitate the trading of it in various companies that are helping to trade or make it easier for people to be involved with cryptocurrency. And I did that in part because I think it's here to stay. Cryptocurrency is not going away, just like gold is not going away. So yes, it had its ups and downs, and yesterday was not a good day for it. But that's true of anything that is relatively new. And I don't think you're going to see anything like crypto going away and disappear.
And so this is kind of like a big contrast to your standard talking heads that might be seen on TV or seen on social media very frequently, but might not really have ultra high net worths or might not have managed enormous sums of money.
And finally, new rule, nothing with crypto in the title ever turns out good.
And even though he's an older generation, he still is acknowledging the value of Bitcoin and cryptocurrency. To me, his level-headed approach and thoughtfulness behind what happened yesterday and how far Bitcoin has come, but that it's still an early asset as far as a large asset class goes, is really thoughtful. And I think that this is actually low-key and under the radar, but will probably in future years be seen as one of the more important interviews or tipping points of Bitcoin and cryptocurrency, legitimizing it as an asset and also helping people to understand it just is volatile. And when you look at the volatility of Bitcoin and cryptocurrency, where does that come from outside of this interview? And the answer is very simple. Bitcoin or cryptocurrencies don't have the same guardrails that you would have in the stock market. So if you look back to March, when the stock market started crashing a lot, there were stop losses or like circuit breakers that would blow and shut down trading for about 15 minutes and allow people to recalibrate. Now you might be saying well, why is that, or what does that matter, or why is that important? Because when you start to get too much selling at one time, it's almost like the floor falls out and there becomes no bottom because you have all sellers and no buyers. So theoretically, a price can drop an extreme amount. The stock market has been set up to avoid that with these circuit breakers that blow. Bitcoin doesn't have that. So, something like yesterday, what probably happened is you had a big drop and then you had a lot of people, as I said yesterday, leverage getting liquidated. And so if Bitcoin had the same guardrails that maybe the stock market had, you probably wouldn't see the volatility on both sides, but it's a meritocracy and it doesn't have pulleys and triggers in the same way that the stock market has. Not to say that it doesn't have any, but it doesn't have guardrails to protect too much volatility. So it just is a very volatile asset. But I think this is one of the most important interviews. I think it's really thoughtful. I think it's really interesting what Rubenstein has to say, and also how strongly he validates this as a true market.